Hello friends, in this video I have a very critical update about the markets. Over the last few days you've been hearing some pretty cautionary titles and content in the videos, and I've been titling my videos, is the market about to crash? Is there a bubble in the markets? Why you should be cautious? Why you should not be buying into the energy rally, both natural gas and crude oil? Why I don't believe that industrial metals or base metals are not in a super cycle. Now, to the extent that there are certain regular trolls who basically write very cryptic comments in the comment section on my videos that, hey, you're always talking about the markets coming down and what's happening. Nothing really happens, all right? All the best to you, all the more power to you. I don't want the market to fall, but as a market watcher and more importantly, as a market participant, it is my job to watch all the signals of the market. And in these videos, I merely put forward my thoughts that I apply as the CEO of my own company that trades for a living. Now, on Friday, something very curious happened. Big Wall Street banks, investment bankers, were reportedly offloading stocks of some IT companies, and that selling was big ticket enough. Now, the initial numbers reached $10 billion or approximately 72,000 crores. But hold your breath. Over the weekend, the figures have started increasing. I am recording this video on the afternoon of Monday, which is the holy day, 29th of March. And by now, the figures have grown to $20 billion. And what kind of selling was it? Was it a large investment bank like Goldman Sachs or JP Morgan or Morgan Stanley? These are just hypothetical names I'm banding around. Was it their own prop book selling? Prop book meaning their own holdings, or was it selling on behalf of somebody else? Now it so transpires that the selling was done on behalf of Bill Wang, who runs a hedge fund, and he had basically built up extremely leveraged long positions. By leverage meaning you have 10 rupees, you basically leverage yourself 10 times by using borrowed money and build positions of 100 rupees, which is 10 times more. Here the initial figure of Bill Wang's leverage is appearing to be a minimum of 10 to 12 times. But like I said, the initial figure of selling was 10 billion. It has now crossed $20 billion. Even the leverage figure can increase. Now the figures are large enough, $20 billion, right? Now, what if the figures were to escalate? Can it result in a snowball? A snowball is when a small piece of snow starts falling off the mountain top. As it rolls down the mountain, it starts collecting more and more, gathering more speed and gathering mass, and slowly but surely it becomes an avalanche and it destroys everything that comes in its way. Is that what is likely to happen? It could. It could. Which is why in my recent videos I have been telling you, always look over your shoulder, always be cautious, be very careful, hold your long positions with stop losses. I even went to the extent of warning you, do not bargain hunt or bottom fish. Don't try to think shares are available at a bottom. So far, the market has been dealing you with what is known in behavioral science as a hot hand fallacy, which means following somebody who's always making money. And in this case, money has been made by the bulls. It has almost become a routine thing. If you buy at 9:15 and sell at 3:30 in the afternoon, you will make money. If you don't make money on the same day, most you will have to wait for is the next day, and you will get out of your long positions with a profit. Now, this kind of complacency, this kind of leniency, this kind of recklessness has become the norm nowadays. Millennials who have zero experience and probably have a lot of leveraged bets are doing this on a day-to-day basis for a living. and they feel this is the right thing to do because this is something that has been making them money day in and day out. Desperate people out of business or out of jobs are now doing this for a living and think this is the only way to go forward. The benefit of having gray hair and 36 years of trading experience under my belt, 28 of which are as a founder, promoter and CEO of a limited company, is that you've seen a few wild phases in the market which shakes you to the core, which basically ensures that you learn some very bitter lessons which you'd never ever forget. The last time a hedge fund's positions were liquidated by an investment banker was in 2007. Unfortunately for me, my father was going through an open heart surgery at a South Mumbai hospital, and the world's largest hedge fund in natural gas called Amaranth Advisors imploded. By implosion meaning there was a fire within the organization itself and it burst from within to the outside. At that point in time, Amaranth Advisors was the largest leverage hedge fund in the world. Now, just when you think that it impacted only natural gas prices, think again. As per the regulatory rules, the assets of all such organizations are frozen and any and everything that they hold. In the case of Amaranth Advisors, it was holding a lot of gold which it had hedged against their natural gas positions. The Securities and Exchange Commission of America liquidated even the gold portfolio of Amaranth Advisors. So not only did natural gas hit a lower circuit, but to my shock and horror, waiting outside the operation theater where my dad was getting operated, on my mobile phone, I could watch my positions in gold hitting lower circuit after lower circuit. So the sell-off can actually snowball. It can gather momentum and it can become bigger and bigger. I'm not saying that that is exactly what will happen, but this is why. And unfortunately for me, in spite of trying to talk my mind out like a doer of deeds as a participant, only one gentleman commented in the comment section, "Vijay, you're sounding different. Your videos of late are sounding different." And that gentleman probably guessed what was going on in my mind. Why I was making video after video advocating caution, why I was saying, is the market in a bubble? Is the market going to crash? Is there a crash ahead? Don't buy this, don't buy that. No super cycle here, no grand super cycle here. Energy is not really coming up. And mind you, in my video of why the markets are falling, the last one, I told you that the ship stuck in the Suez Canal will fail to impact crude prices beyond Monday. And there you have it. The ship has been floated again and crude oil prices have started coming down. Can this sell-off be limited to paper assets or will it also span across hard assets? Now do remember, Bill Wang's fund has done something, I wouldn't say crooked, I would say smart, or maybe even extra smart. It tried to mask its long positions in technology stocks in the balance sheet of its investment bankers using the swap route. People like me with grey hair, with experience in the market, and not the bachas who've come yesterday and day before yesterday who have no clue about what they talk about and comment in the comment section, will immediately realize that this is exactly what LTCM did in 1997 and 1998. And when the banker is holding your position in his balance sheet for you, he will offer you a Coke and a pizza as long as the position is profit making. The minute the position becomes loss making, the banker will dump your shares, which is precisely what has happened with Bill Wang's fund. The banker dumped him like a hot potato. Is more hot potatoes selling in the works? We'll never know. Remember, in the US, as per the Securities and Exchange Commission, hedge funds are not obliged to reveal their exposure and their investments. It is only after a hedge fund blows up that you know it has blown up. Which is why, my friends, you need to be extra careful. It's your money. Nobody can safeguard it as well and as diligently as you can. I continue to remain cautious even though some of you might dislike it. Hey, if there's somebody out there so convinced that this market is going to rise and he wants to or she wants to pledge his house and buy shares, go right ahead, all the more power to you. But as far as I'm concerned, I think you are better off erring on the side of caution rather than erring on the side of aggression. Let's be careful out there. This money belongs to our family. We use this as raw material and working capital to put food on the table for our family. Let's not get carried off. And I remind you again, do not bottom fish. Anything that you want cheap will be available cheap, so there's no hurry to write out checks as yet. On this somber note, I, like you, am waiting for the opening on the markets on Tuesday morning, which is the 30th of March. Let's see how it goes. All the best to all of you, and just be careful out there. Thank you for watching my video. Take care. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.